You ready?
Yeah, and we are live. Just make sure it takes a little while to get through all the
Okay.
going through the streets of internet, right? Make sure everything, all the channels are there. Welcome, welcome. Good evening, everyone. Welcome to Master Your Money with Eric Anderson. Tonight's topic is term or whole life, the decision that protects your family. So we're gonna dive into some stuff about how do you protect your family. What does that look like? There's a lot of options and a lot of things that you can possibly do with that, and we're gonna be diving into that. So if you have any questions and you're tuning in right now, please drop it in the chat. If you're there listening to us, please let us know that you're there, that you can hear us pretty good. Let us know. Drop it in the chat. Let us know, hey, you're there. You got some questions, and we're gonna get this kicked off this evening. Eric, first of all, Eric, how you doing, sir?
I'm good. I'm tired, but we're gonna make through it. Make through it.
You'll make it through, huh?
Make it through. It's been a very interesting month. It's not even a month. Yeah,
It's like
about a month
a
and a half.
week.
Well, no,
Been-
it's tax season started.
or
Yeah, when I got
yes,
back.
Texas.
Yeah, it's been I've been back like a month. Well, close to a month. It's been
Okay,
very, very interesting. Yep.
okay,
A lot
okay.
of interesting stuff this year. A lot of calls and questions, and as always, new clients that are very interesting stuff that we see with new clients and stuff like that.
So,
So,
what brought up to as far as your clients and everything that's going on? What's something interesting that you're seeing this year than you have in the previous years? Is there anything interesting or new or common?
so like Tribe Called Quest says, things go in cycles. So this cycle, this year, that you're seeing, if you're watching social media and stuff like that, everybody's a tax preparer now. I didn't want to get into that topic because we always get into this topic, but everybody's a tax preparer now. So you see around December, January, everybody has learned tricks on how to scam and do returns. So you see everybody doing their little flyers and all that stuff running around saying that they can help everybody get all these returns, get all this money back and stuff like that. So I've already, like I've talked before, I've already had calls from people saying, how much can I get back with these kids? I've had people who've asked me to send them last year's returns because they know I don't do that drama. So they go and find somebody else to go do those type of things for them. A whole lot of that. We're already seeing that this early in the game. But again, it's fine because usually we make up for that. Like I said, we don't just do taxes during tax season. We get the entertainment of getting to go to the IRS for all the scamming.
Entertainment.
I call it entertainment because, like I said, when I go, we're not there for me. We're not there because my PTIN number's on there. We're there because it's saying self-prepared and all that stuff. So again, I'm sorry if I'm hurting somebody's feelings. If you're out here saying you're a tax preparer this year or last year, and this is your first couple years doing taxes, and you're telling everybody that you know these magic tricks and everything to get everybody these huge returns, cool. But again, like I said, my clients come in and they say, I don't want no smoke with the IRS. So Eric, please don't do that nonsense. And so that's usually how we operate. We don't worry about stuff like that. And so it's very interesting because yeah, because I've had people with W-2 say, hey, everybody told me I can write off my cell phone or I can write off mileage from me driving from my home to my W-2 job. I can write that off on my taxes. That'd be everybody, wouldn't it? That'd be everybody. But it's stuff like that that is it just keeps going. Every year it's something different. It's some different scam that somebody has learned that they're telling people that they can do. Um, like we were watching a video last night of a lady who was telling everybody all the stuff you can write off on your Schedule A. Nothing goes on your Schedule A except for your mortgage interest, your property tax, and gifts to charity. So when she was saying all this stuff, but I don't want to say it. she was saying she just got out of prison. So 8 years ago. So when she was in prison, yeah, that stuff was on your Schedule A. You could write that stuff on your Schedule A until the 2018 tax bill, where that stuff on your Schedule A for nurses, people doing contract work and stuff like that, there was a line on your Schedule A that you could write that off. So she might still be kind of back in those days, believing that you can write that stuff off. And the fact that we all know that if you have a criminal record, you can't get a PTIN number, but people are running around still getting their taxes done from you is amazing. So we know you're not legit, but we're not here to talk about that today. Let's talk about what we came to talk about. You got me
You gotta get that out right there, Eric. You got to get that out right
No,
there.
I'm good. Like I said, I'm good. I have plenty of clients. I don't worry about losing clients or people don't want to come talk to me because I'm not going to do that foolishness. As you know, we're almost up to 200 clients. And like I said, I've only been doing this for a month. So we're good. We're good over here. So, and I'm not trying to say that to be arrogant or whatever. I believe I do good work. Not only do people come back, they refer people who want to get legitimate taxes done. So you see, I don't do flyers. I don't, like I said, I don't even do advances. Somebody is not a client anymore because I said, no, I don't do advances. I don't do that kind of stuff. I don't believe in it. I'm not saying it's illegal, whatever, but I just don't want to put that in my practice. I don't want to do that in my practice. So I tell people I don't do advances. So those are not my type of client or whatever. But again, I feel that with what we do, we don't need to do those type of things. And as you can see by the articles and by what we're doing today, we don't just do taxes here. Correct? We're getting ready to talk about life insurance. And you know, I have my group one. I have all my licenses to be able to have this conversation tonight. We're not just talking like I don't know, like I didn't go to school, like I didn't have to take the test and all these things to be able to talk intelligently about life insurance.
So give us a little background about that, Eric, as far as I know you say the licenses you got and different things you've done. Could you give like a little background on some of that areas in as far as in life insurance so we can kind of segue into so we can get into IULs and how we can build generational wealth, right? That's what I see. Correct. That's at least that's what I see on my TikTok reels, right? So go ahead.
So yeah, so again, like I said, I went to college, got my bachelor's in accounting. I worked for a few accounting firms here in Austin. I went on to get my master's in finance, and I wanted to start my own business, so I wanted to get my securities licenses. So in order to get my securities licenses, I had to go work under a broker, and in that broker, they also sold life insurance. So I had to get my group one. And if anybody doesn't know what a group one is, your group one is life, health, annuities, and long-term care. That back then, I'm not sure if that's still all of it, but you had to pass the test to be able to sell all those things as well. And you know, from my past, you know, all the awards and all the stuff, all the trips, all the stuff that I won from selling life insurance back then, but it really wasn't something that was a passion for me. So as I was doing it for a couple of years, I became a manager. So I was training people on how to sell life insurance and do all those type of things. And then it really wasn't something passionate for me that I really wanted to do. I wanted to get back into doing what I do now. So again, like I said, I went there to get all my securities licenses and the group one and all that stuff to be able to meet with clients and kind of be kind of like a full service office where we kind of do everything. I tell people all the time, I don't write policy. I have partners at where I used to be a manager at who I send people to them to help them get long-term care, get life insurance, get annuities, disability insurance, all those type of things. I'm still a broker, but I usually take them to them so they can go do that type of stuff. And then in my office, again, we do taxes, bookkeeping, payroll, retirement planning, all those type of things. So I like to say that obviously I don't just do taxes. It's full-fledged here in this office. We do way more than just do taxes. Again, like I said, that's why I don't jump up in December and January and all of a sudden start sending out flyers, letting everybody know that I do taxes. People know I do taxes all year long. I have clients who we have to do estimated payments, we have to do bookkeeping, we have to have all these type of conversations all throughout the year. So like I say, not to be funny, most people are going to be done doing taxes probably next month around March. And so there's so many clients that do extensions and stuff like that, clients who have to do back taxes, who have to do amendments, who have to do so many things. Um, I meet with clients who get letters, so we have to do abatement letters. We have to, when they're getting audited, all types of things. So I'm very busy all year long. It's not just during tax season. So that's
Awesome.
pretty much what
Thank
we
you,
do in
Eric,
our
for
office. Yeah.
that. Thank you, Eric, for that, man. I really appreciate it, man. So definitely, that's why you this is quote the master class, right, of financial. So I know today's topic, and those who are tuning in, joining us this evening, welcome, welcome, welcome. If you missed that intro, please replay it back. You can listen to all the things Eric does in his office. And so definitely today's topic is term a whole life, the decision that protects your family. And so we're going to dive into these topics. If you have any topic, can you hear me? Okay, I got you. Let me see. If you have any topics or anything, please put it in the chat and let us know if you have anything specific that you have regarding any of these or your life insurance needs, whether it's at your job, whether it's you have some outside insurance or anything of that nature. And we're going to dive into that and what that actually looks like. Looks like Eric, are you having difficulties on that? Looks like the audio is coming out. Just for a moment, you guys. I know it's like we're having some technical difficulties. Looks like it just cut out over there, or internet issues. Can y'all hear us? Y'all let us know if you can hear us. Just want to make sure, sometimes internet and stuff can get there. All right. Thank you, Jesse. You can hear us. Eric, can you hear me? Can you log back out and log back in? Let's see if we can try that. And connect it again. Just one moment. Thanks everyone for your patience. Okay, you can't hear either? Okay. So you can't hear at all. Okay. Let me see. Let's see here. Unstoppable. So some of y'all can hear, some can't hear. Is that correct? Just one moment. Let me call Eric. So some of us can hear and some can't hear. So just one moment, you guys. I know we're having a little technical difficulties with the audio. We were fine the whole day. Sometimes the audio and internet connection kind of is kind of funny or kind of fickle sometimes. That's because everybody's streaming and everybody's tuning in. So that's what I'm gonna blame it on. Everybody's tuning in. Those of you who are here that can hear me, please let me know. If you have any comments or any questions, still can hear you. Great. Thank you so much. If you have any questions in regards to term a whole life or any type of life insurance, just not Eric. Thank you, Chris. He's gonna log back in. Yeah, he's gonna log back in. If you got any questions regarding this, I know he had quite a few as Eric comes back on. He's trying to log back in. Looks like some internet issues. But there were some questions that came up from a lot of his clients talking about whole life and life insurance and IULs and all that good stuff. And what's the best protection for your family? And if you have insurance at your job, and if you have outside insurance from a private place as well. And one of the things kind of came up that really stuck to me was there were some folks that were talking about how if the spouse like passes away or something and leave you with this debt, and they're not able to take care of the debt, and there is no life insurance or anything in place at that time. And so we think about like, oh, whoever you're married to, and if you're connected to, you might be responsible for that. Eric, can you hear me? You don't know what's on? Just see if you could try to say it again. I can't hear you. No, I can't hear you. I can hear you on the phone because we're on the phone. Um, so that was one of the things that came up earlier as Eric's trying to work out his mic over here. But that was interesting. That if you're married to the person, then you are connected to that person, and you might have to share that or be responsible for that debt. So make sure no one. I was like, I want to ask him, Eric, what about student loans? Because there's some people got like a hundred and $200,000 student loans. I need that taken care of. Oh my lord. Oh man. Uh, oh my lord. I don't know if anybody got any student loans or anything like that. Like over a lot, but um we go ahead and come back in here. But yeah, it's I think we had a question regarding, you see, from what you see, which option do most families actually need? That's a good question. That's a good question. Um, that's a good question. Um, Waiting on Eric to get back real quick because it looks like his internet is kind of cutting out. But as long as y'all's internet is great, that's good. It's option you most need. I would, I would personally, I'm gonna go ahead and answer Eric because you coming, you gonna taught me a lot. Anyway, as far as which option most families need, actually some protection than no protection. That's what Eric usually tells me. Have some type of protection. It may be different based on your budget, based on the situation, but definitely having some type of protection for your family, and then you can kind of figure out whether it's through your job. That's what I have. I have something through my job, and then I also have outside insurance and a lot of different other things. So I think that whatever you can afford is something. And you can think about how much it is for, like, if you want to, what you want to do as far as leaving funds to your family or paying out the house and all those things. But at the end of the day, as a person who's had to bury a parent, and realizing that you have to come up with that money, and now realizing that my children, I don't want to put them in that situation, in that position as well. So you're thinking about, what does that really look like, and how much debt do I have, do I want to be able to cover? So this is like a personal um thing for me. um so it's just like, for me, if I know I have my house, I have any kind of student loan debt or anything of that nature, what do I want to make sure it's covered? All right, looks like we're here. Eric, looks like we're about to be there with Eric, so we're excited. Looks like he's coming on. So that's some of the things I think about as far as when I got insurance. I said, hey, I want to be able to make sure I'm covered, make sure that my kids don't have to worry about burying me, or try to do a GoFundMe. They don't have to raise do some spaghetti plates or some barbecue plates. And you think about it, it's like, you know, if they got to do it, I need to know how to do it, right? Like if they got to go out there and hustle and make it happen for daddy, you know, make it happen for daddy, right? But I shouldn't have to put them in that situation if I know better. If you know better, you should do better, right? And definitely with someone that's starting on the budget, it's like get what you can afford. And that's something that I did earlier on. It's like, what can I get? So my term life, whole life is definitely a different conversation. I've had whole life before. It was very expensive. And I think it depends on what you really want to use it for. I think when you think about budget, term is always going to be the best option because it's a lot less expensive. You can probably get something, you know, depends on your health, of course. Probably under, I'm just guesstimating under $100, right? It's probably way less than that usually for term. So I'm just kind of ballpark figuring if you have like not so good health, but if you're in decent health, you should get some really good, you know, term insurance, at least something to like $50,000 policy. It may not be the, you know, the $1 million policy or something, you know, something like that, or $2 million policies, but you can at least get a $50,000 policy that you can say, hey, I'm able to take care of my expenses. They can at least put me in the ground, cremate me, do whatever they need to do, and have some money, have a little party, take care of some stuff, and go about their day, right? If anything, so they don't have to stress out about that. So that's something that I always think about. Eric, are we there?
So I don't know what's going on. I have both of them up. I still can't hear you.
You can't hear me?
I can hear you, but now the camera that I'm using over here is not working. As you see, that camera's on, but it's muted. So I can't hear you on this computer. I have no idea what's going on.
Okay.
What we were doing earlier, we'll have to take a look at that. But so
okay, we'll take a look at it.
Top over here. That's what we need to do to wrap this up.
All right. You.
So we're gonna have to mix it up today.
Can you log off on the other side on that other one, or?
Yeah, I'm gonna log off.
Okay. I could probably hide it. Let me see. Which one?
All right, we're good. That one should be off.
Okay. Can you hear me still? Oh, looks like you can't hear me unless that audio's on. Is that correct?
Yeah, I can hear you.
All
right.
You
good? All right.
Yeah.
All right. So the question, I apologize, everybody. The internet's been acting crazy out here for some reason. As you see, it's locked up.
Yeah.
Locked up for some reason. So the question was, what is the best insurance depending on your situation? Which kind of goes into when we have the discussion about whole life, IULs, things like that, as opposed to getting a term life insurance policy. And that was really one of the big things when I'm having conversations with people. So many people come to me and they say, hey, I'm thinking about getting some life insurance. And I'm like, okay. And it's like, what type of insurance are you getting? My question more than anything else is basically, what are you trying to get the insurance for? And most of the people who come to me, they say, I'm thinking about getting an IUL. And what do you think they say when I say, why are you thinking about getting an IUL?
To build generational wealth?
No, precisely not. Absolutely not. When people come to me and say they're thinking about getting an IUL, the first thing they say is, I'm being told I can borrow money out of it.
Right.
That's the first thing everyone says.
It could be your own bank, right?
They don't talk about how much insurance it is. They don't do a discovery to figure out how much insurance you actually need to be able to protect your family if something was to happen to you or something like that. They run right to, I'm being told that I can borrow money out of it. So that's why I thought it was important to do the video, to do the article the other day, talking about the pros and cons, basically, of having an IUL. People believe that if you have an IUL, I can start putting money into it. It's going to start building all this cash inside of it. And then I can borrow the money out of it. And the money still sits in there while I'm able to borrow the money and pay interest back on that. But again, like I said to people, does that make any sense to you? Just use it in your head, Isaac. I have something that is sitting in an account growing 8%, but I can take the money out of it. The money is still growing 8%, and I'm only paying 3% as I'm paying it back. There's no logic in that.
Mm-hmm.
There's absolutely no logic in that. And so that's why the article made it clear that no, those are people who've had it in there for 10 years or more that are able to do that, because again, the money has been sitting in the account, building and building and building and building to where you are able to do that type of interest on those type of policies. The same thing, you have a whole life policy, not to tell your business, but you know that the cash does not grow in there the way that they try to make it sound like I'm putting money in it and automatically it has all this cash in it, right? We don't talk about the admin fees, all the different type of fees that you're having to pay when you have that money in there. Just think about it. If I'm putting money into an IUL, again, you don't care about, I won't say you don't care, but the premium part of the insurance is not the big deal to you. But you do understand that the money that you're paying the premium on, that's not money that's growing inside of the policy.
Yeah.
Correct. So again, that's just money. So the overage that you're paying, the overfunding part, that's the part that's actually growing the cash. But again, does it make sense to you to pay $200-300 a month for a policy that if I was to pass in 6 months, my family's going to only get $100,000 for, because I'm trying to grow this money for 5, 6, 7 years from now, I'm able to start borrowing money out of it. Again, I'm not here to say life insurance is bad. I'm not even here to say IULs are bad. There are people who have IULs and they are using them correctly and properly. But again, a great example is the one where we were sitting, remember we were sitting on the Zoom, right? When the young kid, he's in his 20s, he's a barber, he has 2 kids and the mother is not in the picture. So it's just him. And there were 2 people in the video who were in the Zoom who were trying to sell him an IUL. Instead of having the conversation of, you need to get as much life insurance as possible so somebody can take care of your kids if something happens to you.
Yeah.
But that was not the conversation. They kept on, they didn't even talk about the life insurance part. All they kept talking about was, it's going to grow all this money in it and you can borrow money out of it. And when you get to retirement age, you can be taking all this money out of it. Not today's priority. Today's priority is, if something happens to me, if I walk out of here and get hit by a truck, who's going to take care of my kids?
Right.
That should be your priority. That's what life insurance is about. That's what it's for. But again, these people who are doing the videos, who are running around saying that they're selling these policies and they're telling you how it has a floor, so you can't lose money even if the stock market does all this and that. Again, that's great. But again, if you are really and truly looking out for the client and not just trying to make a sale, why would you sell that young man an IUL instead of trying to get him as much term as possible?
Right, right.
I dare anybody to come on here and tell me that that's stupid what I'm saying. You think it makes more sense to get a $50,000 whole life or an IUL that has $50,000 to $100,000 in life insurance in it, because he's going to be able to borrow out of it 5, 10, 15 years from now when he's growing money, instead of saying you need to be concerned about if something was to happen to you within the next 6 months or a year from now, or before these kids are old enough to take care of themselves. That should be your concern, is making sure that your family is taken care of. If you're going to do that silliness outside of having $500 to $1 million in term, which by the way, a 20-something-year-old kid like that, how much you think that amount of term insurance is going to cost him?
Like $20, right?
Thank you.
$20.
Thank you. Yeah, but that doesn't make any sense. It makes more sense to tell them to go get an IUL, to go get whole life. And again, it wouldn't even be so bad. But again, you were on the Zoom. Insurance never was discussed. You can borrow out of it. That's all that was said. You can borrow out of it. You can put all this money in it and you can borrow out of it. And again, I get it. When you watch these silly videos of these dudes saying to go get a partnership, each one of you go get $200,000 and $300,000. of a line of credit. Then each one of you go put that to $300,000 in there, and then borrow out of it to go get a laundromat or go get a commercial building and all that. And it's churning all in your head, and you're thinking all that works. And my only thought is, who's paying back the original loan that you got for that line of credit? So if everything falls apart, who's paying that? But again, you're not even thinking about the life insurance part. You're doing that to say, I'm going to put this money in here so this money can grow while I borrow out of it, and it's still growing interest over here. We're not talking about the life insurance part. We're trying to do the slick part of saying, I can just put all this money in here and I can then borrow the money out of it, and it's growing more interest than the interest that I'm paying back on it.
Yeah. That's good. That's good.
And
That's really good.
Bad, Isaac, what makes it so bad, the frustrating part is it's usually people who are in their 40s and their 50s who come in and say this to me. And I heard you saying it while I was trying to get stuff together.
Yeah.
Getting life insurance is not guaranteed.
Yeah.
That's the crazy part. That's the part people don't understand. You can say, oh, I want to go get an IUL and go throw all this money into it and dump all this money into it and start doing this. It's not even guaranteed. Again, I sold life insurance for not a long time, but I had quite a few clients who were either straight up declined or found out they had some type of heart or some type of health issue that they thought they were going to be ultra preferred or whatever. And then all of a sudden they're just getting standard or below standard, where the premium is sky high in order to get this insurance. But again, they don't have that conversation when their whole deal is telling you that you can put this money into this account, you can borrow out of it, and it's going to grow tax-free. So when you get to retirement, you don't got to pay any taxes on it. When a Roth IRA does the same exact thing.
Yeah.
So if I have a Roth 401k at work and I max that out to, the 24/5 or whatever, and then I have a term policy that I'm paying a couple $100 a month on, if that, to have $500, $1 million or whatever in coverage while my Roth IRA is growing, that doesn't make any sense, because in your head, you're saying, but I can't borrow out of that Roth until I'm 59 and a half. And again, if somebody tells you that, again, they don't know what they're talking about, because everybody knows that you can borrow the basis that you put into the Roth without having to wait till you're 59 and a half. So when people tell you that, again, those are the type of people who do not know what they're talking about. Because again, their whole focus is just trying to get you to buy this policy.
Right. Eric, this is really good, because you think about the 20-year-old versus the 40 and 50-year-old. And Eric, y'all know that the camera, if you can see that text, I sent you a text real quick.
Yeah.
To see if you can.
Yeah, like I said, there's something wrong with the internet.
Yeah, if you can,
because it's not even pulling up your message.
Yeah,
there's something wrong with the internet over here on this computer. Because
okay.
I can see the message, but it won't pop it up.
So as far as, because it says just the mic and cam is already in use, so it's like two of them open.
Oh, okay.
Yeah, so I'll just adjust that and see, and then log back in. Okay. Thanks everybody for your patience this evening. Eric is answering questions with some technical issues. So yeah, because between the 40 and 50-year-old, it's like, well, if I am 40 to 50, it's kind of scary, because it's like, well, I probably should have got this when I was younger, right? And then when you're in college or something, you're not really thinking about, oh, I need to have life insurance. You thought that your parents probably had something on you, but then you didn't. And then they just don't get it until life starts happening, right? And then you're like, hey, I need to go get something. When people start talking to you like, hey, you're getting older, you need to, get some life insurance. And now if you didn't take care of your health, you didn't, prioritize that. And then now we're 50 years old trying to get some insurance, and it's a different conversation, right? It's a different conversation. So what would be, I guess, the best budget if there's a budget?
If you're in great shape, it's not just your health, it's also your age. So when people are 50 and 60 years old coming in and saying that they're trying to get, because they did not do what they needed to do, like I'm saying, as far as saving money and doing things to be able to retire, they somehow think that this is going to be the retirement now, because again, these are the videos that they're seeing of these people dancing around saying how you're going to be able to have all this money in retirement that's going to be tax free. You should have been doing that ages ago. You should have already been doing those type of things, so you wouldn't have that situation when you get to your 40s and your 50s and things like that, to now even in their 60s. I have people who are in their 60s who are saying, I'm trying to get an IUL. And it's like, that's crazy. That's absolutely crazy. Again, like I said, when you think about the health and you think about the
I can see you, Eric.
yeah. But again, I can't hear you on this one.
Yeah, just look at me right here. Just look at me, or the other way. I can still hear you, and everybody else can hear you. Just look this way so we can see you, or close to where the mic is. Even though you can see me, but look at the mic so I can get your full face. We'll make the adjustment. So we did have a question. And what's the biggest mistake families make when buying life insurance?
Again, the biggest mistake is not getting enough. To me, that would probably be the biggest mistake. Is, again, like I said, that's the frustration. Like I said, it's almost like how we were laughing earlier when we were talking at the beginning about the people who are saying, I can get you this amount of a tax return or whatever without seeing anything, without seeing your W-2, without seeing your business, anything. They just automatically say that to you. It's the same thing. To me, it's like somebody who says, how much money do you have to spend? And then they work the IUL or the whole life insurance policy to work that out, as opposed to saying, no, I need to get you the correct amount of insurance that you need. Now, if you have enough money to do it in a whole life policy, whatever, that's one thing. But most people cannot. It's much cheaper to be able to protect your family with term and then invest the rest. But again, we're so enamored, we're so excited when we see people do these videos talking about, again, how you can borrow money. Again, you've had your whole life policy for how long? How long have you had your whole life policy? Have you ever borrowed out of it?
No.
See what I'm saying?
It took a lot. It would take a lot for it to build up in order for that to happen. And it didn't make sense for me at that time to be able to put that much amount of money into there and then not go nowhere. And then not, you know what I'm saying? Like it was like 150 or something like that, right? And you're like, dang, 150 a month, right? Like, you know,
so
and it's like
the videos of the people saying $400 a week. That's $20,000 a year to put into an IUL. Instead of, and the very people who are getting excited are barely doing the match at work for their 401k.
Yeah.
And don't have an emergency fund and don't have a savings fund and, you know, have all this credit card debt and stuff, but you're going to run and go put all your money in this because they're telling you can borrow out of it. And I guarantee you're not getting a better rate of return than what you are paying on those credit cards and things like that. But again, we get so excited. Like I said, you know, when I said the Tribe Called Quest thing, everything moves in cycles. So this is the cycle now. This is the cycle. This is everybody's generational wealth. This is everybody's move. Is you see all these people saying they sell IULs. Right now, the big thing, like I said, is the taxes because it's tax time. But it's usually all these people who say they do IULs and stuff. And like I said, just like that Zoom meeting, when we were sitting there listening to that, the whole time I was like, why on earth would you think this young man can afford to do that? Number one. And then number two, why on earth do you think, if you are really and truly professional and looking out for that young man's best interest, would you not say you need to get as much term as you possibly can for the time being? And the crazy part about it is, you said something earlier, what I wanted to say, what a lot of people don't know, what a lot of young people do, they get as much term as possible. Do you know why? Because later on in life, you can convert it.
Yeah, you can convert it. Yeah.
You can start converting it and you keep the same health status that you have when you were in your 20s or whatever. When you're 30 or 40 years old, it just goes by your age. It does, they don't even do a pyramid. If people don't know what a pyramid is, the pyramid is the health, the thing that you have to do. They come take your height, your weight, your blood. They, check your family history, check your medical history and all that stuff to give you a rating. You don't have to go through any of that. You just say, hey, I have 250,000 in term. I want to convert 100,000 of it into whole life. They just tell you what whole life is at your new age, and you just keep it moving. You don't have to go through all the medical stuff and things like that. So again, like you said, when people who are at a certain age now are now trying to run out and go get life insurance, and the crazy part about it is if somebody was to say, but term runs out, you're absolutely right. People think term is a bad investment because you're going to outlive, most people are going to outlive their term policy, right?
Right.
That's what the bet is. But again, if you are taking that extra money with you get the term and take that extra money that you would be using on the IUL or the whole life, and you invest it in the S&P 500 or whatever, when the 30 years is over, what are you? You should be what is considered self-insured.
Self-insured. That's what I was going to get
number
to.
One,
yeah.
And number two, the people who you were trying to protect, they don't need you to protect them anymore. You see what I'm saying? If I get a policy at 30, and it
say that again, Eric. 60, say that again, because that was a word right 30, there. Say that again.
I might want to leave them some money, but I don't have to take care of them. That is what life insurance is supposed to do. If I'm married and I have 3 kids, I don't want my wife to struggle. That would look crazy for me to die and somebody gives my wife a check for less than I make annually. Think about that. You get $150,000 check, and you think that's a come up. And most people, not most people, but there are people who make more than $150,000 a year. So imagine you handing your wife a check for $150,000 a year, and you make more than that per year.
Yeah.
A person like that needs what, $1.5, $2 million to be able to take care of their family. You're not getting that in an IUL. You're not getting that in whole life. You're going to go buy a $1.5 or $2 million term policy and invest the rest. And you're all going to grow and stuff like that. And when your kids get old enough, if you don't pass, so to speak, if you don't pass and the term runs out, you should have been investing. So you're self-insured at this point. So you don't need insurance in retirement and things like that, because you've done what you needed to do to be able to retire. I think there was a question.
Good. No, that definitely answered that definitely answered my question.
Was a question while we were talking. I think
okay, yeah, that was good. Yeah. I think there's another question. Let me see. I think there's a few that came up. I think you probably answered some of them. To buy and forget or revisit over time.
So again, obviously, as your life changes. So again, I'm still a broker, but I don't actually meet with my clients on a regular basis. People are still my clients from way back then, but if somebody calls up there, I'll have them go talk to my partners. But you're absolutely right, Jess. You should be, if you are a professional, you should be meeting with your clients or reaching out to them like every couple of years, because things change, right? I could be single and then I get married. We could have kids. Or, I can get a promotion, or something can happen that would change what the amount that, if I did it correctly, if I said I needed this amount of insurance when I'm 25 and single, I probably need more insurance if I'm 35 with kids, right?
Right.
So somebody should, even you, when I first met you, you weren't married. You didn't have kids, right? When I sold you your first policy. So again, you do not have the same policy when I met you.
No, absolutely not.
My feelings aren't hurt because again, you're married and you have kids now. So why would my feelings be hurt if you don't have the same $50,000 policy, $50,000 to $100,000 policy you had when I first met you? Because again, that's not what you needed at that time, but you need it now, correct?
Yeah. We just don't tell the wife how much it is.
Yeah, I'm not going to tell you how much you got now, but what I'm saying is, obviously, things have changed in that time frame. So somebody should be reaching out to you to see if you've had any type of lifestyle change or anything like that, what would now make you need to have more insurance than you had when you were in your 20s and single. So
that's good. I know there was a question about, is it better to invest or getting insurance, or need to do both, or you just need to
So
do both?
I obviously do both. Again, like
Right.
you said, if you have something that you need to protect, you need to get as much insurance as possible to be able to protect that. But at the same time, you should not be looking at insurance as I'm going to have this for the rest of my life, because you don't need $1 million worth of insurance for your whole life. When you get to retirement age, your goal should not be, if you're going to be leaving people millions and millions of dollars, which I was going to get into. Hopefully, you have done the investing and everything like that, where you don't have to start taking money out of your policy and stuff like that for your retirement. Hopefully, you've invested outside of that term policy to be able to retire. So, I was going to say, a lot of people say all these rich people, all these wealthy people have insurance. The place that I used to work at, there was when I went to one of the award galas, I think the one in Chicago that we went to, it was either Chicago or the one in Boston. One of the guys there, his big claim to fame was Kobe Bryant was his client. And he was saying how, he actually met Kobe before a game, and they were in the limo, and Kobe was signing all the stuff. And this is why people need this, wealthy people have life insurance, stuff like that. Do you know why people like Kobe Bryant have insurance? He obviously does not need life insurance to leave to his family.
Yeah.
Correct?
Yeah.
Another one, I saw something where they were saying Steph Curry has, hundreds and hundreds of thousands, has all of this life insurance. He's worth hundreds of millions, almost a billionaire. So why does he need to leave life insurance to his family? And this is the part that people miss. What is the state tax, Isaac?
The state tax?
A state tax. If you leave,
I bet you're going to explain to us about the state tax versus like a regular federal tax, right?
Yeah. If you leave over a certain amount of money to your family, you have to pay taxes. You have to pay estate taxes on that. So most regular people walking around are not leaving. I think it's 14 single and 28 million now. Most people walking around most people are not leaving $28 million to their family, to where when they break out the estate, they're like, this is how much this estate is worth. And so you guys got to pay taxes on everything over that 28 million. Obviously, Kobe Bryant would have to do that, right? Obviously, Steph Curry would have to do that, right? So basically, they have life insurance to pay the taxes, to pay the estate taxes. So they're able to leave their wealth to their family. So when people say this is what wealthy people do and stuff like that, that's why wealthy people have whole life insurance policies and things like that, to pay estate taxes, not to leave it to their family. How much life insurance do you think Kobe Bryant would need in order to leave for his family to be fine if he's worth hundreds and hundreds of millions of dollars? That doesn't even make sense to say, and now he needs life insurance too, to leave that to him as well. That's why he has life insurance, to be able to pay estate taxes.
Wow,
A regular
that's
person,
crazy.
They don't need, like I said, these are conversations when you're seeing people say, this is what wealthy people do, this is what wealthy people do. They need to extend and explain to you why wealthy people actually do that. You're making it sound like, oh yeah, wealthy people have life insurance to leave all this life insurance to their family and stuff. No, they needed to pay the estate taxes. And again, like I say all the time, look up estate taxes. Look up estate taxes and you'll see it's around 14 million, around 28 million. So again, I'm not making these numbers up. I'm not exaggerating things like that. Just look them up. This is this is how wealthy people are able to leave money to their family without them having to pay taxes.
Well, that's good to know. So I'll make sure I'm ready for that. I was like, you gotta speak that into the existence right there. Like, yeah, I want that problem. I don't know about y'all, but I want that problem. I want to be able to be like, look, I need to take out a couple of mil on here, do this so I can pay these state taxes and all that good stuff. And I'm in Texas, I don't have to pay a luxury tax, right? Because there's some other places, I don't know if they got to pay a luxury tax or some type of, receiving that gift that you got to pay something on it.
So
Right.
a regular person, I'll say a regular person like myself, my goal would be to um, build up my wealth to $3, $4 million, $4 or $5 million, and then live off of that interest in that. So if I have it in something that's giving me 4 or 5% a year, so I'm living off of 250, 300,000, and then I'm able to leave that 5 million to my grandkids, right?
Right.
I'm leaving them wealth, right? When somebody says, but you're not leaving them any wealth because you don't have a life insurance policy. If I've done what I need to do as far as investing and doing things like that with a term policy and then investing all the rest of the money in these brokerage accounts, in these IRAs, all these different types of things, in real estate, all these other type of things that you can be investing in instead of this IUL. So if I had a term instead, then after the 30 years, when the term is over, I have all these investments. I have this portfolio. Again, I'm not saying that an IUL and a whole life insurance policy and stuff like that do not fit into a portfolio. I'm not saying that. The problem is, again, like I said, we are so fixed on I can borrow money out of it, correct? Instead of saying I need to do what's best for my family. Is it best for me to take $250 a month and go get an IUL or a whole life policy that's gonna give me 100, 250, if that, in life insurance, or do I need to go get $1 million and pay $50 for that, and then invest that other $200 a
Invest the
month?
rest. Yeah.
So if something happens to me, I'm able to leave this $1 million to my family. But again, we don't think like that.
And it gives you some room, though. It also gives you some time.
Say that again.
Like, it also gives you some time to be able to, increase your income, gives you some opportunity to be able to do some different things. If you give you some time, as long as you covered, you're good for that time until you can do something else. You can be self-insured by then. You can hit big. You could do something. You can invest. You got a little bit of time, so it gives you a little buffer room. And sometimes it's like, well, you're getting it when you really can't afford it. I think that's what my whole thing is like. Well, I'd rather do this, even though this will be good. I'm just not in that position to do that. And I'd rather have this much for this period of time, just in case something happens. I can at least get my kids through college or, stuff like that. I'm thinking my house paid off in college, anything that gives me enough room to invest in all the Roth IRA, S&P, different things, real estate, whatever I wanted to invest in, to be able to get to that place of self-insured. Then once the term runs out, then I should be good because all these things are good, right? So I know we had a question.
If something happens, like say I have some type of health issue that comes up within the amount of time for me to do the conversion, then I would convert. I would convert and say, hey, I might need life insurance for the rest of my life. And so I need to go ahead and convert some of that because now I know I have health issues and stuff like that. But again, I should already be in the mindset of outside of that, I'm investing in things like that. So again, when the 30 years is up, if you're doing what you're supposed to be doing, you should be pretty much good. If you are doing the absolute minimum to match in your 401k, but you should be doing around 10 to 15%. If you have an IRA outside, if you have a brokerage account, if you're not a fan of that, so you're doing real estate, whatever way you want to retire, if you're doing those things as opposed to this IUL or this whole life policy, again, if that's what you want to do, that's what you want to do. But I'm going to say it one more time. My thought process is I think about that young guy and I think about, again, like I said, I actually was an agent and a manager for, I think I stopped after 5 years. So I've had these conversations. I had a family member who just passed, and they could not afford the insurance policy because he got to a certain age where now it's like, even though it was a term policy, when you get to a certain age, the premiums go up. So he couldn't afford the premiums. So he had no insurance. But if you'd been investing and doing all the other stuff outside of it, and again, I'm not trying to scare people or, be doom and gloom and stuff like that. Real life is out here happening. And you really need to think about what's going on in your life, what's in your family and things like that, instead of being excited and, you know, thinking that the stuff you see on social media and stuff, thinking that stuff is real. It's not. It's really and truly not. You really and truly need to think about your situation, your family, things like that. You know, instead of watching these people dancing around, twerking, telling you all this money that you could be making by putting money in an IUL and stuff. I know you're laughing, but again, everybody be honest. Those are the videos that you see. Those are really the
It's just
people, you know, doling out money or sitting in their car counting money, talking about how, you know, they're getting all these loans and they're doing all this and that and saying how they're getting these huge tax returns. And, you know, we can go on and on and on. And then you get over here and you were like, that's not real life.
yeah.
So if somebody's overwhelmed and doing nothing, what's the simplest first steps you suggest? Definitely on what we're talking about today, I would definitely make sure that my family is good if something happens to me. So if I don't have, even we talked a little bit for a second, even if you have insurance at work, get the most insurance possible at work, right? You know, but we all know that if I lose my job or quit my job, it does not follow me. So I'm not
Yeah.
saying that's the only insurance to get, but definitely get that until you're able to go find another type of insurance that you're going to be able to keep if you quit or lose your job. But definitely you need to think about your situation. Just sit down. If you're single or if you're married, just sit down together and say, if something was to happen to one of us today, what would you want? What Isaac, what would you want to happen? What would you want to happen in your household if something happened to you today? I don't want to say your wife's name out loud, but
I know. If someone
what would you want?
happened to me, right?
Yeah, if something happened to you, what would you want for your wife and your children? You definitely don't want somebody to walk over with a check for $150,000. I know that.
No, absolutely.
I know
not.
that for a fact.
You know, and you know, I would definitely want to make sure that they're good, and I want to have that peace of mind knowing, like I do now, that like the house can be paid off, or any cars or anything of that nature. The kids' college is, you know, completely, you know, fully funded for whatever that is, that they have something that's rolling over into something that they can kind of collect, you know, kind of live off of, that's growing, and kind of invest in that money, you know, after I'm buried, obviously, of course. And make sure they're good, that they don't have to, like, my wife doesn't have to go back to work for at least 5 years. That was my idea, right? Like she has 5 years. After that, baby, that's it now, you know, and then put in a clause in there. If she gets remarried, she don't get nothing. Anyway, you know, because one of the things is I think about, right, and this is just me, and I, you know, I want to continue to get, but this is my thought process. I just don't want another man coming in and raising my children at the end of the day, right?
Where she feels she has to.
What? You feel what I'm saying?
But
yeah, and we see it.
Come pay these bills.
We see it. I work with fathers all the time. You know what I'm saying? I work with families. So for me, I'm like, nah, I don't want that dude coming up in there and something happening. She's emotional, something happening, and in raising my kids, that's not something I want. But if I know I've put certain things in place, right, she doesn't have to result to that. There shouldn't be that shouldn't be on the table.
Yeah.
So
that shouldn't be. This is all. This is my this is all I can do is this.
Yes.
I have to go do this. Yeah. If you choose to get married, that's on you. Obviously,
that's on you.
But to say I have to do that, you know, it's like we joke around all the time. People are like, "What would happen if you die?" She's gonna sell everything and move back to North Carolina and be good.
She trying to leave.
Yeah,
she trying to leave us.
Yeah, she's gonna be good. She's gonna be good.
She's trying to leave us. Oh, she here for you.
Have all the investment accounts and everything. She's gonna be good. And again, I'm not trying to say that to be arrogant. I'm trying to say that I'm being a man and taking care of my wife.
There you go.
Period. I'm not trying to say to be arrogant. I'm saying that I know the responsibility of me having to take care of my wife. We don't even have kids. We don't have actual kids, but you keep on hearing me say my goal is to be able to leave all my investments and everything to my grandkids. As crazy as that sounds, we don't have a son by birth, but we have a son. He's our son. And you know we have grandkids. You know, you've seen my grandkids. Our goal is to be able to leave our estate to our grandkids. And when I say our estate, I mean all of our investments and all that stuff that we've grown over time to be able to leave to our grandkids. We're not thinking about, oh, I want to leave all this life insurance, whatever. No, we have investments and things that we want to be able to leave to them. Period. But if something was happening to me today, she's good. She's fine. She's fine. And again, not in an arrogant manner of saying it. That's the way you should be thinking when you say, I need to go get life insurance. That should be your thought process, not they told me. And again, that's the first thing people say. When we started this video, I said, Isaac, what do you think people say to me when I say, why are you interested in getting an IUL? When people come and say, I'm thinking about getting an IUL, what are your thoughts? I say back to them, why do you want an IUL? And that's what they always say. They told me I can borrow out of it. We don't talk about how much insurance it has in it. None of that. None.
Interesting.
They said I could borrow out of it.
Well, you don't have emergency fund.
Don't have emergency fund. Don't have a savings account.
Like we talked about the, you talked about earlier. Talk about the $400 emergency. If a $400 emergency come up, you couldn't do it. But you want this to be able to borrow out of something that you don't even have it in savings. Correct. You don't even have it in a high yield savings account or nothing.
And
right?
The craziest part, anybody who's an insurance professional on here or knows anything about insurance, ask them what chargebacks are. You know what chargebacks are, right?
Yeah, that means
a chargeback is basically
money, right?
You into doing something that you really and truly can't afford to do. So 3 or 4 months from now, it is killing you to try to do it. So then you cancel it.
Yeah.
And then the insurance agent gets a chargeback. Yeah. Because you didn't go over the budget, you didn't go over to make sure that this is something that you can afford. You just talk to them to do that. How many policies you can have as many policies as you want, many as you can afford. But I would definitely, especially, I know who this is. So definitely in your situation, I would want to have as much term as possible because you guys have little kids. Not tell you business, but yeah, you have kids. So again, your thought process should not be, I need to get some policies to be able to fund my business and things like that. If you don't have enough in there to be able to take care of your kids. What was that last part she said? I thought I said something about stay home. Definitely.
Does the kid?
Definitely.
Kids stay home
because obviously the other person was the breadwinner and was paying all the bills. So again, that's why I said at the beginning, what type of policy is that? If I'm someone who's making 6 figures and I pass and they bring me $150,000, and they bring my spouse $150,000 policy. If I'm a stay-at-home parent, now I got to definitely go get. So now I definitely got to go get a job, right?
Yeah.
No. That question, no. So.
Man.
Even on that thought, like you said, you said that in your own life, you're like, I don't want her to go back to work. So I have to leave her enough insurance for it she would just keep it moving. Yeah. If she's a stay-at-home mom, then she stays a stay-at-home mom. She doesn't have to go out and go get a job. And then again, when you think about that, not only do you have to go get a job to pay the bills, now you got to pay for daycare. So now you have all these extra bills and all that stuff because you didn't get enough insurance. And again, I'm not saying it in like a bad on you kind of thing. But again, that's the type of thought process you should really and truly have when you're sitting down. When somebody is sitting across from you and trying to sell you insurance, those are the type of conversations you should be having. The very first thing that should come out of the person's mouth who's selling you insurance is, what would you want to happen if you were to pass? Not, you can borrow out of this policy.
Yeah, that's the wrong.
And again, you sat on the Zooms with me and watched.
I was on it, dog. I said, they ain't even got stable income. That was the thing. You didn't have stable income yet. You're gonna offer this because it's the Cadillac, the Corvette on the lot, right?
It's
if you sell that red Corvette, you get the commission on that, right?
It's the thing you're watching everybody say to do. Correct.
Like if you sell
Sadly,
this
that's
Corvette,
falling to
this
it.
is the game. You sell this Corvette, you get this X amount of dollars. You like, okay, and you go out there and try to sell it, and it's not what they need, especially when you didn't have
That's not what
stable
you need.
income.
No, it's not what you need. Like I said, the very first thing you should say when you sit down with somebody, if you're really and truly trying to sell them insurance, is what do you want to happen with this insurance if something happens to you? Again, not saying you can't get an IUL, not saying you can't get a whole life. I'm not saying that. I'm saying if I say to you, I want to have this amount of coverage and I can't afford to do that in these things, then that's not the policy for me. So don't push that policy, because you pushing me that policy does not satisfy my problem. If I'm telling you this is my problem, this is what I want this insurance to do for me, but you're still going to try to sell me this policy and steadily saying how I can borrow out of it and it's going to grow tax free and all that. But if when the next year something happens to me, my family is going to be in trouble because I did not get the right amount of insurance I needed to get to take care of my family, that's a problem. That's an absolute problem. But again, when I'm going to try to say this nicely, when you have everybody on the planet who do not have a financial mindset, and again, it's not about going to college, it's not about all this, but when you're walking in saying, I can make all this money selling insurance because I can talk people into it. It's like, again, I don't like to talk about it, but it's the same thing. Everybody and their mama does taxes now.
Yeah.
And you only do that because you believe you can make all this money doing it, because you can get all these people these huge returns and they're going to give you and they're going to pay you all this money to do these returns. Same thing. I'm going to sell you this IUL because, again, it's commission based, right?
Mm-hmm.
Correct.
Yeah.
Do you think I'd rather sell $50 a month policies or $250 a month policies?
250.
If I'm about commissions.
Right. 250.
So if I'm walking around selling a whole bunch of term, I might have a whole bunch of policies, but I might not be making any money. But if I got everybody running over here spending hundreds and hundreds of dollars a month on these policies, I'm going to make all this money. Even though these policies might not be the right policy for this person's situation, I'm making all this commission over here doing it.
Yeah. And I
until you
would
get the chargebacks and all that stuff.
When you said that earlier, Eric, because this brought me to like when you said, I was thinking of tiers. When you think about like, what do you want? You know, you would have passed. What would you want for your family? You think about it. Well, I want this, and let me say this because what I have now is not what I had before, right? So and I had to grow into that.
Correct.
I had more kids and stuff like that, certain things and what I am, assets, all that good stuff. Then I had to increase that, of course. And so thinking about what can I afford at that time, right? And then what I would like to see in that time, like, hey, I just want to make sure my kids at a minimum, right? At a minimum, I don't have to, my kids don't have to bury me and put out no barbecue plates. I just didn't want to have to do that, right? That's at minimum, right?
Yeah.
That's at minimum. At minimum, maybe I can reduce the debt that I do have and make better financial decisions so that doesn't land on my spouse or on my children, right?
Like be able to pay
that's
the
at
house
minimum.
off.
This is just decision making.
Yeah, exactly.
Right.
Yeah,
so
like
at minimum, I got that. In case I'm balling like that, like I told you, we have that problem with the IUL and I got the money, then it is what it is. Just go ahead and take the money and go ahead and take care of the stuff. But at a minimum, if I don't have the money, if I don't have that, a lot of funds coming in, I can at least know that peace of mind knowing like, hey, I've covered myself, babies, right? Spouse, whoever, you don't have to do this. It's good. All this other debt is over here. When if it's by myself, I'm not married, all that's gone away or whatever. They're just terminated because there's nobody to land on, I guess, right? Unless you're married, because then it kind of filed that way, then you might be responsible for it. But at a minimum, that's what it's covering, and I'm good. And then moving on from there, like they may not go to college, as far as having the money for the college, if it's already there, if I have it in my retirement or something like that, if I can move some money over, that's fine. But if I don't have that, I know that I at least have where they don't have to do spaghetti plates, barbecue plates, and try to just put me in the ground. And I went through that with my parent. So I know that, you're just going to have to pay the money and, headstone and all that. And it's a scary situation to think about that, but it's a reality because my mother, I went to my mother's grave Saturday, and thinking about, because her birthday was, and so thinking about like, dang, how much the headstone was and all that. I was like, it's a real thing, and I want to make sure that my kids don't have to go through what I went through.
What I'm going through. Correct.
Yeah. So that was just like, it was just painful. It was a headache. And I just wanted to just grieve, and I couldn't because I had to handle responsibilities because they didn't handle the responsibility. Does that make any sense? So it all landed on me.
It makes absolute sense
because they didn't handle their responsibility.
Yep, and that's the whole point. That's the whole point.
I digress.
Again, like I said, I'm gonna say it one more time before we get off.
Yeah.
I'm not, again, do not think I'm against insurance, because I'm steadily saying you need to get enough insurance to be able to make sure your family, whoever you're protecting, whoever you are responsible for, to make sure they are good if something happens to you. My point is, when all these clients come in here and talk to me or call me, we have conversations, because what I do, again, I just don't do taxes. So clients call all the time and say they're thinking about things like this. And again, they say, hey, I'm thinking about getting an IUL. And I say, can you explain to me why? And I already know why. I already know what you're going to say. Can you explain to me why you think an IUL is the best type of insurance for you? They always say, I can borrow out of it. And I always say, can you get them to give you a prospectus? And like, why? Because the prospectus is going to show there's a possibility, like you said, it could go years without it having any cash value in it. Because you're paying premiums, you're paying admin fees, you're paying all this stuff. You act like I'm paying $200 a month, and then at the end of the year, it has $2,400 in it. It doesn't work like that. It doesn't come close to working like that. You have a policy. You know it doesn't work like that. It doesn't work close to that. But again, I can say that because I'm not sitting here trying to sell you a policy today. So I don't have to sugarcoat and lie and tell you all the great parts of it. I can be bluntly honest with you, like in the article. I gave you the pros and the cons. I talked about how it can implode if you take too much money out of it, or how the premium grows and all stuff like that. I told you that there are plenty. And again, if you don't believe me, just pull up articles on some of these companies who are getting sued by people who had insurance policies and they imploded. Don't just take my word for it. Just go on Google and look it up. Look at all these insurance companies who are being sued by people who thought they had insurance policies and they lost their insurance policies because the policies imploded. How can it implode if it has all this money in it? And if you talk to somebody, they're going to say, oh, it was the way it was set up. Okay. That doesn't solve that person's problem. It's still imploded. You spend all this money putting all this money into it, thinking you were going to have all this money at retirement, and now you don't have an insurance policy because it imploded. You're muted.
That's good, Eric. I know we're a little over time, but we did have some technical difficulties. That's why we kind of went over a little bit. I know you're tired and everything. We did have one last, but I want to wrap it up. One question was, what do you wish people ask to be able to get help and answers / plan? But if you could wrap this up, man, and send us home, that would be great.
Say the question one more time.
All right, I'll put it up on the deal.
Okay. What do you think wish people ask to be able to get help and answers plans? I wish people would say, can I do a 30-minute consultation? Because they're free. I think that's the biggest problem. A lot of times people will call and they're like, hey, I want to meet with you and stuff like that. And they say, hey, how much is it going to cost? So when somebody says that, I always say, please just come in, because it's not about the money to me. It's about me helping you. So if you got to come in here and not pay me, it's all good. It's all good. I don't want somebody to not get information, not get a start, not get help just because they believe they can't pay me my hourly rate or whatever. So that's why we do free 30-minute consultations. If you want to come in and have a conversation, if there's something that you are worried about, that you're thinking about, that you really have a lot of questions. A lot of people call me all the time. I even have people who send me videos and say, "Is this true?" It didn't cost you anything to do that, right? And if I got free time or whatever, I'll respond. I'll respond back to the video, back to you. I'll tell you my thoughts on it. I'll tell you the pros and cons on what they're doing in the video, what they're trying to accomplish, what they're trying to do. And I'll say, but they're not telling you this part, they're not telling you this part, they're not telling you this part.
Right.
And that's free. That's free. If you just send it to me, now everybody's going to start sending stuff to me, right? But if you send these videos and stuff to me, no, I'll watch the video, I'll watch it, and I'll respond back to it. I'll respond back to you. I won't respond back to the video. I don't like responding back to videos anymore. I'll respond back to you. And
you get some of that action, that hater action,
I'm here
trolling action in that there.
I'm here for
it.
Yeah. But so if somebody had questions that they really and truly want to ask me, don't sit back and say, I don't want to pay the consultation fee. I don't want to pay, because a lot of times people will call and they'll say, so what does that consultation fee, what does that pay for? If somebody comes in for a full consultation, where we do a first consultation and then we do the hourly fee and stuff like that, a lot of people ask a bunch of questions and stuff like that. Kind of like, I'll just say a lawyer. I send people to a lawyer and it says right off top, to even set an appointment is $350. So some people think things like that are like a turn off and stuff. So again, that's your business, that's your choice. But I'm back to doing just 30-minute consultations and stuff like that. It's not a big deal for someone to call me, especially if I'm not busy. If I'm busy or whatever, I'll set like a quick 30-minute appointment with you at a different time or something like that. If somebody calls and they want to talk right now I have somebody in the office or somebody getting ready to come, I'll say, hey, I will block off 30 minutes for you, like in a couple of days or whatever, if I can fit you into my calendar, and just call back at that time and you can ask your questions. I'll give you 30, 45 minutes and I won't charge you for that.
Appreciate that. That's great. Y'all heard it from him. Y'all hold him to his word. Y'all see the number right there. We have right there. We appreciate you, Eric. I know we've taken up a little bit of time, everybody. So we really appreciate you. Please go to the YouTube channel and follow on at Anderson Taxes. The also on Instagram and TikTok. Please do that. Please like, share, comment, subscribe. Any questions, any videos that you see as well. And then also, please go to thefinancialturtle.com. Be able to subscribe there as well. Thank you, Eric. I appreciate you. And everyone have a good night. We'll see you next Tuesday. Next Tuesday, right here. Same channel. All right. Peace.